Good morning. This is Pat Ownera and Frank Walczak from Inveniam, and we're super excited to be hosting the Ownera guys who are going to be sharing with us a little bit about their systems, their business, their solution, the problem that they're solving in the marketplace, all around the reality of tokenized markets. And Ownera has been a partner with Inveniam for just a long time. We've been communicating and talking and friendly for years and years, but really started working together closely maybe 24 months ago. And we're super excited to have Greg and Anthony with us. And Anthony, why don't I start with you? Give me a minute on the Anthony Woolley story, and we'll hit the Ownera story in a minute.
Very good. Thanks, Pat. An absolute pleasure to be on with you today. I will keep it brief with the Anthony story. But what I would say is, I spent 25 years working in public capital markets, major institutions, saw a lot of the transformation over that period of what had happened in the public capital markets, and then latterly got very engaged in what was going on with the potential transformation using these new technologies. Now we're talking about in the context of tokenization, technologies such as blockchain, distributed ledgers, etc. And to cut a long story short, I got talking to Ami Ben David, the founder of Ownera, about 4 years ago now. And ultimately that led to me leaving the big institution and finding my fintech, as you would say. And it's been quite a journey since then. And really what's been key to that, and you talked about our collaboration, but it's in the context that we've been working to bring the whole industry together to solve the problem of opening up tokenization at an industry level.
Yeah, and you guys have been great, and I have to tell you, and I want to give maybe this recommendation. One of the lovely things about Ownera is that many times in this world you get to work with technically competent and capable people, but you're blessed when you get to work with that and people who are fundamentally good human beings, right? And I have to tell you, Ami, you, Greg, you guys are just great, and I think the goal of bringing the industry together, it's a pleasure to work with people of your caliber. And I'm actually going to poke at a couple stories down the road as we hit those. But Greg, why don't we go to you? Tell us the Greg story.
Sure. Nice to see you again, Pat, and same. It's good to see you again, Frank. So my story, interestingly enough, is not too dissimilar from Anthony. We both came from the world of capital markets, where I spent nearly 30 years in the fixed income space. And when I decided that I wanted to close that chapter and move on to something else, I looked deep within myself as to what are the things that I found most interesting in recently. And the world of crypto I found interesting more because it was new and an emerging technology. But what really got me, going is lifting up the hood and really understanding the underlying technology that drove the world of crypto, and that was blockchain and distributed ledger. And that was probably around 2014 when I really became more aware, started trading a little Bitcoin on my own. And then I realized what distributed ledger technology was all about. And to me, it was this epiphany coming from the world of fixed income, seeing all the post-trade requirements from middle office and back office and trade reconciliations and outages and so on. And it was this epiphany that, wow, the street's going to embrace this. Finally, we're at a point that we could have a settlement process where it's going to be clean and seamless and no errors. And, everything's going to finally move on as a well-oiled machine. The prediction was right. It was just way too early, because it's now getting to the point that the street is finally getting to get comfortable with the technology, get through the crypto winter, and recognize the true value of how this technology can be utilized. To the point of Ami, one of the things that I found most interesting when he was looking for a head of sales, and that's my role in New York, was he was smart in that he didn't necessarily want to look to someone who has a pure technology background. He knew that in order to bring the clients to the table insofar as an understanding of what we are, being, the global banks, global asset managers, exchanges, pensions, family offices, and so on. He wanted someone with that capital markets background who really understood the market at its core, not necessarily a technologist who understood the intricacies of blockchain and tokenization and so on. that could be taught, and which is what I've been doing for the last year. But he needed someone who had that background and understanding and skill set. And I've been thrilled to join the company. As I said, I joined less than a year ago, early January of this year, and it's been water out of a fire hose drinking kind of, but it's been a phenomenal experience.
Yeah, it really is. There were 4 or 5 years, 6 years where we were pushing a rope up a hill, and I have to tell you, like, to mix metaphors, I feel like we hit the top of the hill, and now it's going down and rolling down the other side of the hill, and we're running ahead trying to make sure it doesn't, what's rolling down the hill doesn't take somebody out, right? You know what I mean? And oh, this doesn't work, plug this in, right? We gotta think through this issue. We gotta, how are we gonna make all this work? And really, the last 12 months have been just a lot coming at us. And Frank, you've been on our team for a long time. Thanks for joining me and helping host this. But Frank, give a 2-minute reminder of who you are and your role here at Inveniam, and a little bit about your background and what you do for us here.
Sure, Pat. And it's great to be here. Good to see you, Anthony. Good to see you, Greg. We've been working together with these guys for quite a while. My background is capital markets, foreign exchange trading. Basically worked for Cantor Fitzgerald for years. Was lucky not to be in the World Trade Center. Was working foreign exchange for those guys. Set up their foreign exchange trading desk in London. Came back from London, lucky not to be in the building for 9/11. After 9/11, I helped rebuild their equity trading area. I left there in 2016. Was toying around with some AI stuff. That's when I went down the blockchain hole as well. And then I got hooked up with T0, and I was asked to come and join T0 and do business development with them. And that's where, Pat, you and I met for the first time. And that's when I really discovered what the way you looked at the market, we're looking at tokenization as data rather than just fractionalization and distribution. And that was going to be the core and the foundation of the market. So after T0, you asked me to come and help with business development. So it's been about 4.5 years, and I've been here trying to help with our ecosystem development and our strategic partners.
Frank, it's so good to have you as part of the team. It's so wonderful to have you working with all of the ecosystem partners, and I guess that leads directly into Ownera, right? Talk to me about what is Ownera. What is it that you do? What is the problem that you solve? What was the call to action that Ami was responding to, the need in the market that led to the creation of Ownera?
Yeah, indeed. So yeah, I mean, today everybody's suddenly talking about tokenization, right? The last year, and I think a number of profound forces have come together to reach this tipping point. I think we're at right now where there is this dramatic transformation now underway. But those don't happen necessarily overnight. People who are new to the space think, wow, where did this come from? But actually, it's been a bit of a journey for all of us. For myself, I was actually involved in a lot of the first institutional projects involved in how do we take this tokenization technology and adapt it for the industry. And that goes back really 6 or 7 years now. And when a new technology emerges, what tends to happen is people intellectually project forward and intellectualize the implications of that very quickly. But they may have actually projected forward many years in their mind in a very short period of time. And so what you see is there's many things that have to happen for a whole industry to embrace and move on a new technology side. And what we saw at Ownera, and that the problem we set out to solve, is we could see all of these tokenization projects starting to get implemented. Ami was involved in some of the first industry projects a number of years ago, as I was on the institutional side. But what we saw is that the technology was there, right? People could implement projects and they could tokenize assets and they could set up these environments where they might take a particular type of blockchain technology, tokenize an asset, onboard an investor, build the solutions for things like custody and payment, etc., and enable investors to start investing in fractions of real world assets. That all works, right? That's great. These venues, and as many leading fintechs that have been bringing these venues to market the last 2 or 3 years. But there is a problem. And the problem is it's very hard for any one of those venues to achieve a level of scale that makes this change meaningful for the industry. And what I mean by that is that if you have a venue that has a few hundred assets and a few, maybe even tens of thousands of investors, that's great. You start to establish an environment where investors can start to access things like alternative investment opportunities that have not been readily available to them previously. But really, one of the very big prizes here is getting enough level of distribution so investors don't have to worry about KYCing and onboarding onto many different venues. They have their preferred advisors, wealth managers, etc. They want to be able, through those advisors, to see assets all over the world, thousands or even tens of thousands of assets, not tens or hundreds. When you can get that, when you can get investors all over the world able to access tokenized assets all over the world, you start to achieve this wonderful thing, right? You can bring down ticket sizes through fractionalization, and you can enable those investors then to buy and sell assets they hold between each other. And that's then, that mass distribution then leads to unlocking liquidity in these previously very illiquid assets. So the problem Ownera is solving is that problem. How do you connect all of these disparate tokenization platforms, investors, and different types of institutions in the industry to make all of this work at scale?
Talk to me a little bit about the tension between the network and the as facilitating the creation of a network, a new network, and the incumbents who want to hold on to their silo, right? Because there's, as Todd Stevens at Inveniam likes to say, turkeys don't vote for Thanksgiving, right? There is a little bit of a tension there, right? Because you're creating a network where you're aggregating liquidity across silos using a networked, decentralized solution, yet you have people who've built silos, in some cases over hundreds of years, and they want to preserve those. I'm imagining you see that tension every day, and how do you deal with that tension, right? And I'm sorry if I'm going in the wrong direction with these questions.
Exactly the right direction, because you're getting to nub of some of the key points here about what is needed to unlock this at scale when you have incumbents, new entrants, people with vested interests in existing relationships with their clients, etc. And that was understanding that dynamic was also key to the way we approach this, and the open approach we took with Ownera. So there are different parts to this, right? So one of them is what we're trying to do is get the highest quality assets in the world, the best infrastructure projects, commercial and residential real estate, funds, whatever, and be able to make those digitally accessible to investors all over the world who want to diversify their portfolio and get access to those. Now, where are those highest quality assets? Right, they're being represented by the largest issuers in the world and distributed by placement agents who are the largest banks in the world. Where are the investors that really want access to this? Invariably, we're talking about wealthy, maybe high net worth investors. Well, they have advisors, their clients are wealth managers, etc. These large institutions are not going to readily necessarily give up those relationships. They want to enhance and add value to their clients in terms of advising those assets, where they can be distributed, advising those investors, where they can get access to those assets. So we don't believe that the way this is going to happen is for somebody to create a marketplace or a venue in the middle of all of this and say, everybody come to me, I'm digitizing the world's largest market, and all the assets and investors will come and it will be great. It's just not going to happen. Right. So we always felt that this is only going to be unlocked if it's done in a decentralized way. And it's not going to happen with a single venue in the middle of all of this. So we've right from the get-go, we felt the right model for this is a peer-to-peer model and a peer-to-peer environment where regulated institutions, those that have assets, those that have investors, provide maybe custody services, payment services, etc., that they can establish the peer-to-peer connections they want to establish to start to connect digital distribution chains, ultimately creating a chain from the asset all the way through to the ultimate beneficial owners who are taking that, investing in those assets. So we always felt it was peer-to-peer. We felt that institutions need to be free to make the connections they want to make. And those entities could be exchanges, right? There will be marketplaces with central limit order books, all those good things, but they can then hang off those peer-to-peer nodes. And so ultimately we approach this in terms of creating a peer-to-peer network of regulated institutions and doing it using open source protocol that enables those institutions to connect peer-to-peer in a standardized way.
And when we think about that, and because you mentioned, order books, etc., at what stage? And I want to let you go into your demo, and I want to allow you to put this up. But at what stage does automated market making and thousands or even tens of thousands AMM pairings, where the GP of a specific property, right, that's a $100 million asset that's got 40 million of equity, right, and that you're not going to get a market maker in that thing, you know what I mean? But if he can put 10% of the value of the equity tokens paired against an equal amount of USDC or whatever the digital instrument is, and that you then have an AMM function that's trading, how does that fit into this network that you're creating? You know what I mean? Where people are seeking primary issuance distribution, secondary issuance distribution, and this AMM function versus the need for a human to maintain a central order book, do you know what I mean? Or an algorithm to maintain a centralized order book versus a decentralized series of AMMs. And think about how that's going to come about this year and 10 years from now. Like, what's that going to look like in that evolution?
Yeah, because what I'd say first of all is many people look at the public capital markets as their reference point, very liquid, millisecond transactions, tight spreads, automated market making, etc. We're not starting there, right? We're starting with assets which are basically illiquid, right? Yep. And creating enough distribution that you then start to generate liquidity. And it starts, first of all, with the distribution, right? At the moment, we have these isolated tokenization platforms that have no scale. So the way we see it unfolding, and it's really one step follows another, is first of all, you have to start connecting peer-to-peer these environments. You're effectively interconnecting pools of liquidity, albeit very illiquid pools of liquidity initially. But then as soon as you do that, and as soon as you give the opportunity for an investor, not just to click in a primary and invest in an asset, but maybe to then issue a sell intent, and for another investor somewhere else to pick up that sell intent, all of a sudden you create this tipping point, this cascade, where investors can then start to buy and sell peer-to-peer, right? And what you find, and we find this in our demos, we do at conferences, things, very quickly market makers emerge, right? The human type initially, making a spread on these assets, and then we see that snowballing. And as we add peer-to-peer nodes to this environment, you get an exponential effect, right? Because every time you bring an institution into this peer-to-peer environment, they're bringing pools of assets and or pools of investors, right? And so you then start to take the industry through this hockey stick, if you like, to really start to interconnect. And then everything follows, from the manual market makers to the automated market makers to many of the things we see in the public markets. But it's a journey, right? That's going to take a few years. But in that transition, there'll be moments in time where things suddenly take off because you've got a tipping point of making this two-sided market work at scale.
I think I want to point out two things, but I want to throw it to Frank to ask a quick question. Then let's get directly, Greg, into your presentation. But I want to bring to mind when the New York Stock Exchange started to list bonds. And the problem was the infrequency of the trading caused market makers to have too much money tied up into those bonds, and they couldn't make money at it. It was dead capital. Does that make sense?
Mhm.
And one of the things that we need to, as an industry, go away from is thinking that it's a binary, meaning it's a 0 or a 1, illiquid or fully liquid 24/7, 365, right? And the reality is trading by appointment, where it's going to trade 15 minutes a day or 15 minutes a week, and you build an order book for an hour ahead of that, or it's going to trade for 2 hours a month or 4 hours a quarter, that allows you to build an order book with a mark, and then all of a sudden you have third-party data collected in that you can deliver it, and all of a sudden, market makers can get involved when they can shine the spotlight of their attention and their capital for these moments in time. And what is this evolution going to look like to 24/7, 365, all of this AMM functionality? But the cautionary tales of what's happened, Europe, while the bonds are listed over in Europe, the problem is Europe has these massive Eurobond issuances, so that there's enough trading, because there are these huge issuances, which is America. There's a multiplicity of issuances that, even though they're large, they're not anywhere near that scale. Do you know what I mean? And so there's a benefit and a disadvantage of both sides. And if we can bring smaller issuances, so you don't need to be the largest of the large to issue through a conduit in order to get a market maker for a listing, but you can get these smaller issues, and then we can tie them up. Boy, your system, once something gets distributed, and then there's peer-to-peer and there's mechanisms where we tie that in, I'm just telling you, this is going to explode opportunities for access to capital beyond just the biggest of the big, to new geographies, new places. And Frank, when we think about, and what I want to throw to you, when we think about the ecosystem, right, and how this peer-to-peer and tying together all these exchanges and all these silos, and we're talking about this because this is what you've been living for 4.5 years. Talk to me about the vision of those who want to build a walled garden and those who want to facilitate the network, right? You know what I mean? That walled garden view, you still have some people who are saying, no, you have to come into my system and it's a walled garden only, and we're just going to create the new centralized thing. Where are we in kind of the sentiment in the market? Do you know what I mean? Of the network versus the walled garden, and even INX, they were just bought by Republic in order to completely take down their garden walls. Do you know what I mean? And say, no, we have to.
Well, we saw it. We saw it with some players early on. When I was at T0, and some other players that were in the market as well. And Ami actually was very involved with one of the players that is one of the biggest walled gardens out there. And I think what we saw with the walled gardens and what we saw early on with tokenization, Pat, was people were going to tokenization because they couldn't go to the regular capital markets to raise money. So they were looking to see if they could go raise money. So the projects early on, going back to what Anthony was saying about finding premier assets to bring online, the assets were not very good that were initially coming to tokenization. I mean, when I was sitting at T0, there were so many people coming in with so many different projects, and they were all basically garbage. A lot of them, maybe 1% or 0.5% of those were something that we would even think about doing. So when you look at when you're talking about a walled garden, you have to, Anthony hit on this before, everybody has to come into that walled garden. So you never get the distribution, and either the distribution of your asset to investors or investors to look at your asset. It confines you on both sides of that equation. So by linking all the ATSs together, which is what we're trying to do, and what we're with Ownera, trying to create the distribution out to the institutions, connecting institutions, ATSs, exchanges, and other entities, the wealth, high net worth family offices, all the people that are going to make this environment and grow. You can't do that with one entity. And you can't do that with one entity in one jurisdiction. you're going to have an open network where different jurisdictions are going to be able to come together, and people are going to be able to glide through those different jurisdictions in order to look at the assets and diversify their portfolios the way they want.
Right. And you know what's funny, Frank? That's exactly the way we perceive it. And that's the way we look at it. The word interoperability is a pretty funny thing. The way we look at it is exactly the way you defined it. I've seen other uses of the word interoperability, which an advertising, if you will, of, you could trade across all these different platforms and all these different products, but you have to be on our blockchain. Right? So what does the term interoperability mean? It's misplaced in that situation. But we look at it, quite similarly. We look in a way that you do, in that interoperability is meant to be agnostic to the investor who's actually looking at that asset. And Anthony will go through the demo in a moment, where you'll see a variety of different assets that have been tokenized, could have been published by any asset manager anywhere in the world. And me, the high net worth investor, and I'm determining what investment is suitable for me. I'm clicking on the Inveniam data room to get the bona fide information about that investment. I may take a month to do so because I'm doing my homework, but then I go ahead and do it. I click to trade. To me, the average investor, just like me buying a stock on my E-Trade account, I don't care what's going on in the background. I simply know that I like that asset. I want to own it as part of my growing alternative investment portfolio. And I see it, I like it, I click to trade. The FinP2P protocol, which is the backbone of Ownera's software, they're the orchestration layer meant to, in a very simplistic way, without burning and minting across blockchains, which we think is highly complex and fraught with risk, keep the assets on the native chain. And it's just, changing the record of ownership. Like that's the formula. That's the secret sauce that makes this work. What we think is ideally. And you're going to see naturally, and Pat, you said at the beginning of the chat that it's the access to private market assets that has just been growing. I mean, and when I first started investing, or my father started investing, 60-40 was all he thought about, and 40 was bonds. Right now, if you speak to most family offices, the 40 is alternative investments. Yeah, and then this sliver of fixed income, of course, and then the rest is equities. And in some cases, an entire portfolio is made up of alternative investments. So it's only growing.
Yeah, and
right.
And it's growing in the number of slices, but not only that, and it's shifting in the movement, right? And when in this higher rate environment where risk-free, not risk-free completely, but fairly risk-free, I'm earning 7%, call it 5%. Suddenly the threshold for me to go into these alternatives goes up, and moving that around. And, one of the largest pensions here in the US, I was talking with their CIO, they moved considerably their portfolio over to fixed income. They moved it entirely, took a ton more. They doubled their allocation to real estate, and they are a buyer right now of huge amounts. But meanwhile, they're also they don't see growth in first world global equities. Right. You know what I mean? And they are, these allocations are changing. And by the way, we got to have a marketplace and a system that allows for the movement of capital for these theses to be lived out and actually invested, where there's an ability to manifest your investment thesis that isn't just for the largest of the large, right? That the whole world has access to this. And I'm going to give one more historical example, right? When Rule NMS came in, right? And all of a sudden people were trading. I mean, I remember I used to pay, when I was at Bear Stearns personally, I forget what it was, $250 every month to the New York Stock Exchange to trade there. And I used to pay a little bit to it. You know what I mean? And I literally had to go buy at that location, right? I was buying, and our floor trader at Bear was trading this piece, versus Rule NMS came in, and nobody cares anymore. We don't care if we're buying that asset off of any of these electronic exchanges. And I think that the systems, the infrastructure that's being built today, nobody's going to know or care where it traded. It's, Greg, as you said, the investor's going to say, I want to buy it, and they just want it delivered real time.
I look at it also, without trying to sound overly dramatic about this. I think for us in this nascent industry, and we're putting all the pipes and plumbing together, I look at it as an obligation for that next generation, the up and coming investors, the up and coming traders, portfolio managers, high net worth family offices, and so on. Like this type of technology is going to, again, the word democratization is often used, but really goes to the point. You should be able to access alternative investments if that's your bucket of choice. You should be able to access it anywhere in the world very cleanly and seamlessly. What Ownera's technology is allowing is also for the growth of a secondary market. Today, it was said earlier, you buy a private market investment, a piece of commercial real estate, you better be owning it for life, right? Or until the property is sold and you can get paid out, because an ability to exit, it doesn't properly exist. And there are times, and we were talking about early in the traditional finance space, you've got corporate bonds that are issued, right? And then you've got thousands upon thousands of secondary market corporate bonds that are able to achieve some level of liquidity. May not be ideal, but liquidity does exist. And there are platforms like bonds.com that allow that type of, flowing of, buying and selling exist. And then even in the structured note market in the 90s and early 2000s, I did a tremendous amount. I was involved in a lot of the structured note issuance. That was very bespoke. You structure it, you issue it, you better be owning it for life. And it turned out over time, people wanted to exit out. And slowly but surely, this secondary market, because the street created it. Well, is this happening here?
And by the way, as somebody who early in my career sat on a desk where I made enormous money finding a secondary buyer for a bond. Do you know what I mean? And I still remember, why I was arguing that decimalization was bad for the market, right? Because it was going to do away with people like me who are going to find the buyers. Right. And all it did is do away with my comp structure, right?
Right.
And the reality is Bond Central came a year later and it did everything I did times 10. Do you know what I mean? And literally you had a marketplace where you could find and buy and sell, et cetera. And so it's exactly the same thing. And what it's going to do is it's going to allow financing to go into geographies and sectors that it has been exceptionally hard to gain access to. And this is what we're going to deliver. But Greg and Anthony, I want to kind of tee you up. Take us through a demo. Take us through. I think you have a slide or two. I think you want to give a demo, and let's talk through that because I don't want to. I also want to leave time for questions and comments.
Yeah, we'll do. And it's always a little bit dangerous doing this on a webinar, right? It's just like patting my head and rubbing my tummy at the same time. But let's see if I can just show you a slide and a little bit of demo. And I think it's a demo that really then will drive home for people what this is actually going to look like and what it means, right?
Hey, so, Anthony, before we do that, I want to cite two questions, right? That maybe in your demo you can hit these, if that's okay. Right. So question number one is from Tradesman. Great to see you. Right. The talking about what you're doing that's bringing the players together so critical mass can be achieved. That was kind of the synopsis there. But number two, talk about regulatory compliance, due diligence verification processes. And they use two examples, SDX and Tokeny, right? What these are. So if you can address what native tokenization platforms you support, you don't support, how does that work, et cetera, and where do the various players plug in, which I'm sure is going to come out there, but I wanted to highlight the question.
Sure. No, fantastic. We'll see if we can hit a few of those as well. Okay, there's just really one slide here just to explain what you're about to see in the demo. So there we go. I can see it on the screen. So here's the problem we have, right? We have large institutions and smaller players, digital exchanges, etc., all with their tokenization projects. So here we have a Bank X. It could equally be an exchange, or it could be an asset manager, or it could be a wealth manager that just has investors, right? And there are many of these projects out there all going to production right now. So here we have Bank X, and they have DLTX. right? So every large institution venue are working with these different emerging distributed ledger tokenization platforms. So for instance, you mentioned Todd at R3 earlier, right? This could be Corda sitting here that this Bank X has chosen, or it could be Ethereum or a public chain, or it could be Quorum or whatever it might be, and or it could be a tokenization solution from people. You know, we work with many people, Tokeny and Vitalo and others, and so this is part of the problem, right? You've got these platforms, they're coming to market, but they're making specific technology choices. And here you see, and you'll see it in the demo, BankX, fantastic job. They managed to acquire Alcatraz Island. They're converting it into prime real estate, fantastic studio apartments. They're converting out of the cells over there. And in London, they've acquired the Tower of London. Maybe the royal family over here is feeling a bit hard up. So they've got these fantastic high quality assets, right? In reality, it could be a data center fund. It could be large bits of prime London real estate, whatever it might be. Great. And they've got investors, so they're off to the races, right? Or they think they are, except as we said before, even if these are the largest investment banks on the planet, they will not achieve scale of assets and investors to really unlock this. So what we did with Ownera is there's some fantastic technology we could talk about and show you, but almost more important, we took this very open approach from day one being really 3.5 years ago now, to bring the industry together, to develop this peer-to-peer capability to unlock this distribution. So I have the privilege of chairing a not-for-profit group under a wonderful organization, Global Digital Finance. They recently merged with the Global Blockchain Business Council. So I think together they're one of the biggest, largest voices in this world of digitizing finance. And that provided an environment, a neutral environment, where different commercial entities could come together to crack this problem. So that's a group that's grown over the last 3.5 years. It includes the largest buy and sell side institutions, the largest exchanges, and many of the digital leaders in this space, including obviously Inveniam and others we've mentioned on this call. Great. So we have this Bank X, and we have these other projects, right? We've got this other bank, the first one may be using Corda, the second one's on Ethereum or Stellar or Tezos or whatever it might be. And actually this whole approach is agnostic to that. For whatever the type of tokenization technology, it can work in this environment. Bankwise also been doing a fantastic job with their assets. They're mining the moons of Saturn. And they have this really long-dated private equity fund that's holding some pyramids out in Egypt. Again, this could be real-world private equity funds, whatever. We've obviously anonymized all of this for the purposes of the demo. And last but not least, Bank Z. I would say Z over here in London, but Bank Z, they have this Krypton Metals fund that's being distributed. So here we've got all of these fantastic projects. How do we connect them? This is what we brought this industry group together to do. And what this group developed was a peer-to-peer open source protocol called FinP2P, for financial peer-to-peer. And what it does, it's not a marketplace or a venue. What it's doing is it's connecting peer-to-peer, any institution carrying the licenses they carry to carry out the role they do, whether they're an issuer, whether they're representing an issuer, whether they're a wealth manager, payment provider, custodian. And that is fundamentally the problem we're solving. So that's all great on a slide. And I guess, do we want to see it then? We'll do what we did is with the group, with this peer-to-peer open source protocol, we actually created an interface just to demonstrate how it works. So what I'm about to show you is quite simplified, but what it does is all of it works against that open source protocol. So this enables any institution to build an environment like this for their investors to access assets all over the world. Here we go. See if I can do this. Press a few buttons.
And Anthony, we're starting to get more questions in, and that we're going to show a few of them. So as we do the demo, let's try and make sure we leave a few minutes at the end to answer some of these questions.
Yep, fantastic. And you've also, I'm lodging a few away regulation and all of this good stuff, so I'll let you keep track and make sure we hit all of those points. What are you looking at on this screen here? And this could be, this happens to be on my desktop, could be on my mobile phone, etc. So here you go. I'm Anthony. I'm an individual who's a client of Bank X over here. This is a white label platform, so it could be a large IB building the whole wealth management platform and building this into it, or it could be a smaller player taking a version of this software and white labeling it. I have a bit of cash, right? So I've got $100 million at bank, and I can see some assets. Now, I'm actually an investor client of Bank X, and you can see here Alcatraz Island, as we saw on the previous slide, is being tokenized and distributed by Bank X. So here it is, Alcatraz Island. And it's detail the investor's not really interested in, actually, but for the purposes of the demo, this happened to be built on a Hyperledger blockchain, right? And most importantly, and as you would say, Pat, data is everything, right? So there is a little bit of Inveniam in here because, it's been great working with you guys and many of the other companies in the industry group to make all this happen. So you can see here, you can explore the asset at a high level, or using Inveniam's technology in this case, you can drill in. So you want the details, right? If we're going to make these illiquid assets tradable, we need timely, up-to-date, accurate information, the best valuation information we can get, etc. So you should be able to drive down into this and explore it as ever you want as an investor, with the assurity that you're looking at good quality data that would support an investment decision. This is obviously incredibly important in the primary market. It's even more important if you're an investor and some other investor somewhere you don't know is issuing sell intents and you're trying to work out what they're selling is any good. I think this is obviously, you guys, this is your area of expertise, but so I might let you add a comment or two to that, but fundamentally, quality of data is one of those key elements that's very complementary to this problem.
Yeah, the only thing that I would add real quickly, and maybe I'll throw it to Frank also if he has anything, that's not a one-time event, right? If you do it, the data grows and you have an automated data collection and underlying surveillance of the asset, eventually it goes stale, and then we're back to the old world of every time you need to do a sale, you're underwriting the entire asset again, instead of maintaining the asset where it's always ready for sale, right? And so how do we build in the workflows and the ability to maintain the freshness of that data to feed this? Because without the data and the ability to surveil the asset real time and having third-party oracles, secondary trading becomes too expensive because of the underwriting and diligence you have to do yourself. Frank, anything you want to add there?
And even the time lag it takes to do the research if all that information is in disparate systems, right? So what we're doing is we're basically bringing all that performance data from the asset to that token and making that available on demand. So at any point in time, you want to know what the performance of that asset is at that time, you can click into our system, or our system has a link, attached to the token, where you can drill right down into that performance data to look at all that legal, financial, operational, and experiential data if that's required. But being able to have that in real time is what is going to be the foundation to make this alternative markets look and feel and act and trade more like public markets. Because like we talked about before, everybody is looking for alpha and they're not finding it in the traditional markets. People want to get into the alternative markets, but that's the barrier to entry is the disinformation. Now, some people are holding on to that disinformation, keeping that disinformation intact because that's where they make their money. But, there's more people coming into this realm and more people wanting to come into this realm. And, the way this society is moving, we want to democratize access to this realm and not just keep it for the 1%.
To that end, interesting that the demo that Anthony's providing is a web-based version, and it was largely done because it's easier for this webinar to actually do it in a web-based form, but we also have it in a mobile app form as well. If anything, there's certainly, to what you were just saying, there's I think of it about the number of millennials that are out there in the market. They're all in their 40s now, and they've largely grown up digital. And these people are now running companies and departments and so on, and they're wealthier and they don't have time to talk to bankers. And they also have a supercomputer in their back pocket, and they want to be able to pull it out easily, know what they want to invest, and click to trade. So web-based version is going to be valuable for a lot of people, but for many others, you want a mobile access as well. So that is also available.
Very good.
And you guys demo that, and we've seen that demoed in a few conferences. So
very, very powerful in a conference setting when you have the audience clicking on a QR code. It brings up the mobile app, and Anthony will orchestrate this trading game among all the attendees, and it's very, very powerful. It's very cool to see everyone getting really into it. Like the trader mentality comes out, and they're all getting involved, and it really highlights what they're doing is they're buying and selling tokenized financial assets that have been born on various different blockchains, and there's no silos, and they're buying and selling in a primary and secondary market, and they're doing it seamlessly. I mean, that's the true reality, what we're trying to create.
It's quite funny. We did this demo out in San Francisco, and we ended up with actually a financial quant winning the game. So obviously it was a bit biased, but it was interesting. As soon as investors can buy and sell these assets peer to peer, you immediately get those market makers, people making spreads, etc. It's quite fascinating to see. But anyway, so I will just dive back into this, shall I, briefly? So, okay, and this maybe draws in some of the red questions, right? So I'm a client of Bank X, so they've done their KYC, AML on me, etc. They understand that I'm an accredited investor, and that maybe I'm appropriate to see certain assets. I wouldn't see assets in this app if it wasn't appropriate for me to see them. And Alcatraz Island shares, actually, this is my bank who is representing this issuer. Great, so I can take that and I can invest in that. I can say which account to pay out of. It could be fiat US dollars, it could be a stable coin, it could be a CBDC in the future. It's some form of cash, whether pre-funded or not. And I can invest in this asset, right? So I could buy 10,000 shares at $50 a share of Alcatraz and submit that, right? What's actually happening here is an actual DVP transaction, delivery versus payment transaction. There you are, it's done. Basically, I have become an owner in Alcatraz Island, in the shares of Alcatraz Island. I'm on the cap table, and the cash has moved to the seller. So something that might take weeks or longer in the private markets can now be done in a few seconds. Great. And this is all out there, and this is being done in the context of individual platforms. So what I did here is quite conventional. I'm a client of Bank X. Bank X is representing the issuer, so they've done the due diligence on them. I've invested in it. Great. You don't actually need this peer-to-peer technology to achieve that, because that's all sitting in one bank's environment. Where this gets very powerful is, okay, I can also see other assets. The Krypton Metals Fund is Bank Z. This is a type of Ethereum blockchain. You can see the Krypton that we're mining, etc. So this is a different institution representing this asset. I can see it because both the institution representing that issuer and my wealth manager allow me to see it, right? I've been KYC'd by my own wealth manager. So in many ways, what we're doing is we're putting in a digital environment, something that the financial services industry is used to operating in a manual way. You can think of this like, private placements being distributed or syndicated loans or whatever it might be. This can all work in exactly the same legal and regulatory construct, just on a digital chain, right? So you've got Krypton Metals Fund, you've got Saturn Mining shares from Bank Y. Yep, this is sitting on a Corda blockchain. Small shout out to R3. You've got different data rooms for it. You can explore it. But this is an asset that's been represented maybe by a different bank over in Asia or the US or whatever. And all of these assets will have regulatory profiles themselves, right? I could be sitting in London as I am as a UK investor. I might want to invest in these Saturn Mining shares, and they may have been issued in the US under an SEC Reg S exemption to international investors. I'm an accredited investor in London. And all of these things can be supported by the technology and the institutions in this network to enable those transactions to happen, right? So investing in Alcatraz is one thing, but then being able to do the same thing with an asset that's represented by a different bank, different issuer, and being able to invest in that, right? I can do as equally easily, right? I can carry out a transaction, and this has been done not with a marketplace or venue in the middle, but by mobilizing peer-to-peer connections that institutions have chosen to make directly between one another using this peer-to-peer protocol. So all of a sudden you get this distribution unlocked. Okay, these are all primary issuance. It's a demo that has the primary and secondary open at the same time, which is a bit odd, but it works for the demo. So I've invested in assets primary. I can also, when I own the assets, I can also issue buy and sell intents, right? These aren't on a venue. These are buy and sell intents that are coming back to the asset and getting redistributed to any investor in the ecosystem who's permitted to buy it. So, for example, here we go. Somebody's issued a sell intent, wants to sell this at $51 a share. I could pick it up, right? I'll say which account it's in. This is a full IOI, not a partial one. I could confirm the transaction. I've just bought a bit of Alcatraz. Actually, it was Greg, I think, that posted the sell intent. I've just bought a bit of Alcatraz, not through a primary now, but in a secondary, off another investor who could be a client of a different institution in a different part of the world. And equally, I could publish my offers. I could issue a sell intent on this asset. Maybe I'll sell 5,000. I say which account I want to be paid out into. Could be through an IBAN or a CBDC or whatever. And I want to make a bit of a bigger profit, so I could issue it at $55 a share. There you go. That's come back to the institution representing the issuer and got reissued to the investors. So what we've done here is focused on the business problem of how do you open up distribution for tokenized assets at an industry level in the way that the financial services industry can understand, whilst being able to achieve that fundamental disruption of being able to enable investors all over the world to transact in securities and settle those transactions in real time.
And Anthony, I'm gonna make a couple statements that I want you to comment on, and I want to be aware we only have 9 minutes, so we're gonna kind of speed this up, right? You're leaving the regulatory function. You're a messaging hub between systems, a peer-to-peer communications network to facilitate trading between these silos, where you can settle and clear in multiple different systems where the system of record lives, right? And the ability to do that, and there are custody issues around that we're going to leave over here, but the regulatory issues are the function of the primary actors who use your technology. Is that correct? You're not engaging in that function.
Yeah, and that's really important as well, because we're not creating a regulated marketplace or venue in the middle, because the industry won't unlock distribute. It just won't happen in terms of the vested interest you talked at the beginning of the call, etc. What we do as Ownera, obviously we worked hard with the industry and had the industry all collaborated to develop this open source protocol. And then what we do as a tech provider is provide commercial implementations of these nodes to institutions. And those institutions are then responsible for those nodes. They integrate them into their systems, and then they can use them to make direct peer-to-peer connections to other institutions running FinP2P nodes, whether provided by us or somebody else. So if you take the internet as an example, we're more like the Cisco providing routers that make the internet work, if you can think of that analogy. Right.
Absolutely. One of the questions that eMoney Lab asked is, everyone's focused on the largest issuers and funds, but aren't they late majority rather than innovators? They are the last ones to adopt a new technology that threatens their really monopoly, right? They use hegemony as their term, but what I would get to is, where are you finding adoption? Who are the early adopters? How do we weigh the challenge of working with the largest while expanding and maintaining the function of DeFi? And really the reason Bitcoin was created, right? You look at the message that was in the first block, right, of Bitcoin, with the Bank of England bailing out the banks, right?
Yeah, I would say the first people in this are the disruptors. The question is, who are the disruptors? Because the disruptors aren't necessarily just the small players. People think of disruptors as startups, but you get disruptors all the way up through the value chain. So, if you took, the world of ETFs, right? You had disruptors come into that market. disrupting the existing fund management industry. And they weren't small players, right? They were significant in their own right, maybe originally hedge funds or whatever. And you can get the largest players that can be disruptors as well, right? I mean, we work closely with JP Morgan. It's no secret because they're on our cap table, right? One of the largest institutions in the world, but you find their disruption as well because they played it forward. They're actually in a dominant position, but they know how they can take a leading position in the new world, as well as there being the fintechs we talked about, ourselves, you, others disrupting. So it's not a matter of whether it's small or large. It's understanding who is disrupting, who wants to disrupt in the value chain. And that happens at all levels, right?
3 more questions in the last 5 minutes, and we're going to go through. Greg, I'm going to throw one of them to you, right? What's the commercial incentive for financial institutions to take down their walled gardens, right? Why would they do this, right? And Anthony just mentioned, responded to that a bit, but give me your 2 cents on that, Greg. Why would they do that?
All right. So here's how I kind of look at it. If you think about where the retail interest is, you're using that demographic. There's tremendous interest from the retail client base in alternative investments. We kind of defined that. We defined that earlier. God knows there's an awful lot of studies out there as to where Gen Zs and baby boomers, where are they getting financial information. I think I read something recently where in the UK, they said 85% of Gen Zs get their financial information from social media influencers, right? There's just a change in the way that the investment community is growing into this very technology-friendly way of investing. And the large asset managers, they are starting to recognize this. They certainly are. And they also recognize that they have to be able to provide these alternative investments sourced from many different parties. It simply can't just be from their own ecosystem, if you will, their own private equity.
They can't be selling out of their own book,
no,
or out of their own origination pool.
Yeah, and they might not have the products that they're looking for.
And
right?
They don't want to risk, therefore, losing portions of that client base because, again, it's not the same mentality that it might have been in my father's generation and grandfather's, where you put your money in an account and it stays there for life, very sticky. It's very, very fluid now. So I think the way the approach of a modern day asset manager, the way that they look at their clients, is they realize it's not as sticky as it was, and they need to provide them the types of investment alternatives that they're looking for.
I look at it very similarly to there's multiple examples of this, but 401ks. You used to have a 401k that only had American funds, right? But or whatever the family of funds was that was delivered, and then not only did people demand it, but there were lawsuits. Right. And now there's risk associated with not having a diversity of choice. You know what I mean? As a plan sponsor, there's market risk that you're going to lose clients to those who do offer it. Yeah. Right. But also there's risk associated if you're pushing assets that you're selling. We all know about the settlements that were paid as people were pushing their RMBS onto their client base. Do you know what I mean? And and as they did that, the fines that they paid in the many billions of dollars, right, were epic. And they're not going to get caught in that of pushing just their own product. Right. That removes risk. And I want to hit. We're going to go do last question. Joe asked the question about accredited investors. Again, that's going to go to the person who owns the client as the onboarding, who is using your tool. Right. So they're going to have to do it in their own jurisdiction in which they're regulated. And that's a function that they're going to own. And now what technology is going to play on-chain ID? Is a whitelist solution going to work? Probably not. I'm saying as a long-term solution. Is it an intermediate solution? Yes. But it is not a long-term solution to hit this at all, full stop. Just like you had identity. We have literally 1 minute and 20 seconds. So I'm giving everybody their 30 seconds. Greg, give me your final 30 seconds on where's the market going, brother?
All right, so I'll end it by this, and it's a follow-on from what I said a moment ago. The way that the largest banks and asset managers are thinking about it, what they're recognizing and what they're starting to do is focus on the next generation, because they recognize that's where the money is, where is it going, what's the mentality of the people who want to invest, because it's very different than the way it was traditionally done. And they're going to look for those channels to access not just the same old investments they always did, this mix of stocks and bonds, but they want to diversify, they want uncorrelated risk, and they want to have access to excessive returns, knowing what the risks are.
Frank, you got 15 seconds before we give Anthony the last word.
Okay, well, I'm just going to reiterate, with this new generation, they're going to need data. This is an Inveniam push. They're going to need data that they can trust and then that they can rely on, because the only way that these alternatives are going to be able to move in the liquid fashion and cross-border is that if everybody trusts that, if everybody's working off the same data and they trust it, and that's what we provide. Ownera provides the distribution. Inveniam is providing that trusted data that people can rely on when they're making an investment decision.
I'll do 10 seconds, Pat, right? So in this world we're in, there is supply. There are high quality assets out there looking for those investors. There is demand. There are investors all over the world looking to break that 60-40. We've just got to unlock the connection between the two. Once we do, this is going to just be an avalanche.
I'm going to give my final word. eMoney Lab, I think you have a focus, which is a good point, which is we're going to see mid to small adopt and grow, and we're going to see not number 1 through 30, but we're going to see number 31 through 5,000 adopt, lean in, and that's how they're going to catapult to the top. And what we don't want to do is see a consolidation where we had many vendors and now there's just Amazon, right? What we want to do is facilitate a world in which there are many people bringing people into the marketplace. That's the goal. Decentralized finance, where large players are plugging in, but as well as giving new on-ramps. And that's really the goal. Guys, it's been a pleasure. Thanks for joining us. And it was wonderful to be with you.
Likewise. Thank Pat.
Thank you, Pat. Thank you, Frank.
Thanks, everybody.
Bye-bye.
Bye-bye.